Hello, everyone. Welcome back to another one of Tennessee Valley Federal Credit Union's mortgage seminars. We've got a little bit something different to start off 2022 this year. First off, I want to introduce two of my guests today. We have mortgage originator Wendee Gibson. Hey, Wendee, how are you?
I'm great. How are you?
Doing good, doing good. And we've got
Good.
Jessica here as well, Jessica Parrish, who is our mortgage originator as well. Hey, Jessica, how's it going?
Hey, going
Good. All
well.
right. First off, I'll tell a little bit about myself for those that if it's your first time tuning in with us. My name is Bryan Fryar. I am the mortgage sales manager at Tennessee Valley Federal Credit Union here in the mortgage department. Been in the mortgage business, wow, 2022 is about 24 years now. I've been with TVFCU for about 14 years, going on 14 years, and been in a mortgage sales manager capacity for several years now. Quite a bit of experience in the mortgage business, seen a lot of the, seen a little bit of the lows, seen a lot of the highs. Here again, going to give a little bit of our expertise and some of our experience, and going to hand over to Wendee. Wendee, tell a little bit about yourself and what areas you cover for the credit union.
Okay. Well, I have been with the credit union almost 3 years. And I am primarily in the Cleveland, Athens area. But of course, we serve anybody that calls us. So,
Yeah, there you
yeah,
go.
yeah,
and,
yeah.
and Jessica, everybody might hear me call her JP. That's her nickname that I've given her years ago. So, JP, you want to tell a little bit about your experience and yourself and what areas you cover here at the credit union?
I am Jessica, and I cover the North Georgia area for the credit union. I have been here at the credit union for going on 7 years now.
Oh, well, great, great. So love having you both here today. I know you both bring a wealth of knowledge in the mortgage industry and your experience, and you're going to tell us a little bit about some of your stories about 2021, about what you've done for some of the membership, and then we're also going to lead that into hints and tips for 2022 to if you're looking to purchase or refinance in this very volatile real estate world we're in right now. So it's some people it's a little scary, but hey, this is it's still business. People are still buying, selling, refinancing. That's why we're here to walk you through the process and help you with that. I recommend to anyone, if you're looking at purchasing or refinance, make sure you're talking to an expert in their field to help you along with that process. We hope you work with TVFCU. We have several originators, including Wendee and Jessica here with us today. But they definitely can walk you through the process and help you through that little bit of a volatile world we're in right now. So first off, I'm going to talk about maybe some tips and hints. Well, I'm sorry. We're going to lead into our success stories. Sorry, I'm getting ahead of myself. But let's talk a little bit about 2021. Everybody knows it's been an interesting year. We thought 2020 was an interesting year. Wow, 2021 was that was one for the books. I remember coming into this year almost exactly 1 year ago to this date, reading all the reports about mortgage rates were going to be going up in the first quarter of the year. Refinancing was going to slow down. The housing market was not nearly as tight as it is right now. I think I saw the average homeowners a home in the Chattanooga area gained in value about $50,000, if I'm not mistaken, is what I heard last, which is incredible in a 12-month period. But fast forward now, here we are, January 2022, and mortgage rates stayed low through 2021, actually lowered. So historically low. We have seen them go up slightly recently. Again, though, I like to remind everybody, because I, like Wendee and Jessica, have been in this business for a little while. We've seen rates when a good rate was 7.5%, 8%, 9%. That was a good rate back in the 90s. I remember in the late 90s. 4.5% is still a very good rate, historically speaking. So mortgage rates stayed low through 2021. A lot of people took advantage of refinancing. And I know that's going to kind of lead me to Wendee right now. You've got a success story on a refinance for us you want to tell us about. So, Wendee, I'll let you take it from
Yeah.
here.
Yeah, absolutely. So, yes, 2021 was absolutely a phenomenal year. A lot of success stories, but the one that really stuck out in my mind was I had a member call in. He had purchased his home, I think back in 2005. He was a single guy at that time. Since then, he's gotten married. His family grew. So basically, he was calling in to want to look at trying to do like a home equity line of credit or a renovation loan. So when he had sent me all of his information, I started looking at his mortgage statement. I was like, wait, we actually need to look at doing a total refinance for you and just pulling that cash out so you can do those renos. And basically, we got him a savings of like 9.45 to the low fours. So that was it was not only a savings on his payment's less, and he got money out to add to his home. And of course, his family they're ecstatic. So that makes you feel good when you're helping somebody. So
wow, 9%. I haven't seen a rate like that, like I said, since probably the late 90s, early 2000s. But I think I read somewhere Monday an article that said something like 5 million U.S. homeowners missed out on the refinance boom when rates were super low earlier last year. And again, still super low. Like you said, you got this gentleman from a 9% to in the fours, low fours. So that's they always say, excuse me, you want your interest rate, you want to cut it by 2 points or 2%. In this case, cut it in half, and got him a really good deal.
Total success story for them.
Success story.
Absolutely.
And I know there are a lot of people probably still sitting out there right now that are sitting on 5, 6, 7, 8% rates. That it might be good for them to look at refinancing sometimes. One of the things I always, when it comes to refinances, and I've always kind of said this in my career, is most people, when they purchase a home, they're younger, they take out a 30-year mortgage, a 30-year fix, which is that's very common in the United States. Everybody does it. But they live in the home, build a little equity, and they're in their career, they start making a little bit more money. So they may want to look at refinancing to a 15-year fix or a 10-year fix to be on a shorter time period, and the rates are really good on the shorter term too. And also too, another savings is the overall interest that you pay back. So if you could shave off 10 years of interest, 15 years of interest, that would be fantastic. I know everybody's goal is to have their home paid off as quickly as possible. So, hey, get ready for that retirement or get ready for those kids going to college.
Exactly. Yes, exactly.
And still talking about refinances, I know something we are seeing too. People that may have already refinanced, but yet they may need to do something to the house, or they have something they want to finance or pay off. What would you recommend? Let's say I refinanced in 2021 and I've got a 15-year fix and I'm sitting at 2.25% interest rate. That's a fantastic rate. That's almost like free money. What would you recommend? Let's say, hey, I want to do some renovations to the home.
And that's what I'm getting a lot of those calls right now. I'm sure Jessica is too. And, you don't want to touch that interest rate because you got a great rate, but, let's tap into your equity and let's look at doing either, your home equity line of credit that leaves that sitting there waiting for you. So when you need it, you just pull on it. Or, if you've already got that project and, we can look at doing that fixed rate second. So a lot of great equity programs right now to let you use your equity that you work for. So
and while keeping that low interest rate on that first mortgage and not touching that. I know in some circumstances I've looked at some deals where somebody might have refinanced, but they missed out or didn't pay off some debt, or they may need to take out a large sum. Sometimes it is better to, even if that rate is super low, maybe refinance the whole thing and have one payment. But that's something that you'll want to talk to an expert, like you, Wendee, or Jessica, and look at your options. Because everybody likes options. Because, hey, I've got this great low interest rate, but it might be better for me to combine everything and just go ahead and put it in one payment. The rate may be not the target rate that I wanted, what it was at 4, 5, 6 months ago, but it's still a very good, affordable rate. And you get it all in one payment. So that's something people need to be cognizant of and look at too in their situation. Put everything into one sometimes. So, Jessica,
and that's why it's so. I didn't mean to interrupt you, but that's why it's so important. For us to be able to get that whole picture and see, exactly what the whole picture looks at, so we can, try to make the whole thing look better
Yeah.
for them, rather than just, oh yeah, you need that money, yeah, let's just do that. Well, now let's look at all of it, see
Yeah.
what's going to come out better for you. So
I know a
yeah.
lot of times when I talk to originators and like you ladies, and then some of my other staff, they'll call in, or they'll call me and say, "Hey, Brian, I was talking to this one guy, and he just wanted to see if he could get a lower rate, but I
Yeah.
was looking, and he's got a lot of debt,
Right.
or he's got a child that's in middle school and going to college soon. What do you think about offering this? And give him a plan A and a
Right.
plan B. Hey,
Right.
we can get you that lower rate, or we can do this, but what if you went ahead and tried to pay off all this other debt and consolidate in one, and then try to pay everything off in a shorter term?" I know that's one of the things as far as debt consolidation. That's kind of something that people look at is, and that'll lead me when I get into the tips about doing a budget. But if you've had to take out some debt because of let's say a family emergency, a medical or something like that, um, and you had to run up some debt, but you want to get that debt paid off, but the rates you're paying maybe on a credit card, the minimum payments are so much that you can consolidate it all, lower the outgo, and then you have that extra money each month that you could just knock away at that principal and pay that down even faster. We see that a
Right.
lot too, a lot too.
Right.
Especially,
Yeah.
in my case, we a lot of my friends in my generation, we're having parents that are older and coming up on medical expenses with them. Definitely want to budget, and if you do run some of those expenses, home equity line of credit or a second mortgage, something like that, may be the ticket to do that. So,
Right. Yeah. Because I had a member call in yesterday. Same thing. During all this COVID, his spouse had actually lost her job, so they had tapped into their credit cards a little bit more than what they would have liked to have done. So basically, we turned around and did a fixed rate second to consolidate those, and took their payments from like 1,600 down to 4.
wow, wow.
So he was like, "Thank you. Yeah, this helps us dig out,
Yeah,
until she gets herself reestablished and get them
yeah,
paid off." So
yeah. Get that
he was
paid off.
like, "We were going nowhere." Yeah, he said, "We're going nowhere paying these minimal payments." So
Yeah,
yeah,
spending
that
here.
helps.
Yeah,
Right.
yeah. And
Yeah.
it's, sometimes it's something that they need to do right now to get themselves
Right.
to a better place, and then they can,
Sure.
knock that out and pay that off in no time. A lot of times we run
Mm-hmm.
into that a whole lot, a whole lot. COVID
Right.
has really thrown a monkey wrench in a lot of people's lives, and
Right.
we're
Yes.
very fortunate to have these low interest rates over the past couple of years. It's given them some options of what they can do.
Mm-hmm.
Which is going to lead me to my next thing. Jessica's got a story, or she's going to kind of tell us a little bit about low interest rates have driven this purchase market through the roof like we have never seen before. I've never seen in my career, and reading back in history, the demand for homes right now is just insane. Builders cannot build fast enough. We're seeing, interest rates that are low, so that's driving demand. People can afford more of a home, but then also we have other things thrown in there with people are relocating because with their jobs, a lot more companies are offering work from home. So you have people that may work for a company in California that can relocate to Tennessee and still work for the
Right.
same company. I have that in my own
Mhm.
family. I have a nephew who is looking at that a big major company in California relocating to Tennessee for a little bit more of a home, or somebody who lives in Tennessee gets a job opportunity in another state, Texas, Florida. We see people moving quite a bit. Tennessee is, I think, the number three, fourth, fifth destination in the United States to move to. So we're seeing a lot of people relocate here. Another thing we're running into with home prices is a materials cost. Because of COVID, because of the issues with supply chain issues, we're seeing the home prices go up. Last I read, I think just for lumber alone, the average home was driving up the cost upwards of $15,000 per home just for lumber costs and everything. So that's going to kind of lead me in my next story, Jessica. I know we're seeing housing shortages and people. There's been battles, bidding wars going on. I have heard it's kind of it's not quite as hot as it was, but still seeing bidding wars. And so Jessica, just tell us a little bit about what you noticed in 2021 when it comes to the purchase market. Oh, I think we got froze up with Jessica. Can you hear me, Jessica? Oh, I don't think she can hear us. Um, hey, Jessica, can you hear me there? No. Well, gonna Wendy, we can kind of talk about this amongst
Okay.
ourselves if you want to.
Okay.
I mean, as far as purchases and everything we're seeing right now, we're still seeing a lot of people buying homes. Um, it is a slower time of year because it's January, February. That's not really the home buying season. But we're still seeing people go under contract. And Jessica, can you hear us now? You got us? Nope.
I thought she did when she touched
Yeah.
her earphone.
Uh-oh.
Yeah.
Okay. Um,
Yeah.
but we're still seeing people purchase homes, and they're saying that 2022 is still going to be another record year for
Right.
demand of homes and everything. Rates are still going to be,
Right.
even though they're going up, they're still going to be historically low. And then we have one of the largest generations, the millennial generation, coming in and buying homes right now. So
Mm-hmm.
that all that's driving those home sales. I know a big part of your pipeline, Wendy, is our purchases, refinances and purchases. You kind of have a good mix. And I
Mm-hmm.
know up there in the Cleveland
Yeah.
area is a hot market up there. A lot of people moving to the Cleveland area.
It is. And, I've had a couple of conversations this past week to where, agents, they want to see that pre-approval letter.
Yeah, yeah,
And I even had one come back and be so specific that I had to put on that letter that their income had been verified.
yeah. Okay.
Like it wasn't just a pre-qual. They wanted to know that, that had actually been done because I
Yeah.
think they had a contract on the house and it actually had fell through
Yeah.
from the pre-qual to the actual approval status. So yes, it's, and it's still a multiple offer
Yeah. Well,
thing going on.
and something that too that that I had never seen before in my career, and I know you probably hadn't until the past year or two. The cash offer buyers that are coming to
Oh,
the area.
yeah.
Yeah, and
Mhm.
you have buyers that are
Mhm.
coming to us that are getting financing, having to compete with cash buyers, especially those coming
Yeah.
from states where they may have sold a home that was 800,000 to 1.2
Right.
million dollars, and they're buying the
Right.
same type of home here for $400,000.
Yeah.
They have a
Yeah.
lot more cash to work with a lot of times.
Yeah. Yeah. And they don't care to come in here and overpay for it because they just upgraded their sales. So
Yeah,
yeah, they're, yeah, and they got cash in their pocket.
yeah,
So
yeah, to
yeah,
work with. Makes it a
yeah,
little tougher.
lot.
Makes it tougher for
Mhm.
the especially the younger
Mhm.
people that are trying to
Yeah.
buy. They don't have a whole
Yeah.
lot of down payment. They're trying to get
Mhm.
financing, and that's where that like I said that pre-qualification letter really comes in handy. Uh,
Yeah. Yeah. It really has in this last year for
yeah,
sure.
yeah, yeah.
Mhm.
Multiple offers. I know we have one of our
Mhm.
employees. I just spoke to one of my originators. He went under contract just recently. I'd been looking for a home
Mhm.
for months now, and
Mhm.
had his pre-qualification letter. Had missed out on several other homes prior to. Even though he had the pre-qualification letter, he's got
Right.
outbid by cash buyers,
Right.
and he luckily was able to get an acceptance on this one. So he's very happy
Mhm.
about that. We're happy for him. So getting close to that, hopefully that closing date here in the next few weeks. But
Right.
yeah,
Yeah.
the realtors and the
Mhm.
sellers want to make sure that you are a serious buyer, and
Yes.
that pre-qualification letter, it's very, very smart to have that in
Mhm.
hand
Oh
uh,
yeah.
before you even really do anything else.
Mhm. Mhm.
Um, and then it's just how the business is nowadays. And also too, I tell people, you in some cases you may have to offer a little bit more than what you're expecting, but be prepared for that too. Have the money
Mhm.
set aside if you're going to do that. Now, I don't recommend going a whole lot over that. That's my own personal recommendation. But if you've got the money, some people are doing it. That's up to
Mhm.
them. But in the world of financing, if you're going to offer 10 to 20,000 over listing price or offer price,
Mhm.
you make sure you have that money set aside because a lender's not going to lend you above that.
Right. Right. Right.
That's
Yeah.
that's
And
going to
I've
have to.
actually had to, turn around and restructure deals
Mhm.
just because, of the money that's going to have to come out of pocket now because
Yeah.
what they had to bid to get it. So yeah, it's like I said, it's been a year.
Yeah, yeah. And appraisals. You have a seller who they and their realtor, they got together and they came up with an offer price, and it was accepted by the buyer, and appraisal value may not come in what they're asking.
Right.
So I always tell, my originators, and I know you do this, Wendee, to prepare your buyer that it is a possibility the appraisal may not come in. Now, I do know, several realtors in the business. Some of them are very good. They know what they're doing. And they will be upfront, with some of the buyers and let them know that, this is going to be more than probably what it's appraises at. So, and the buyer needs to be prepared to pay that difference if the appraisal does come in, less than the contract price. So,
Right.
does
Right.
happen quite a bit.
Mm-hmm.
So we're going to run through a few tips here, and just kind of my hints and tips for success in 2022. If you've listened to my broadcast or our broadcast before, these are kind of redundant, but hey, I'm just going to keep driving it home because these are tried and true. My years of experience, I know Wendy's too. If you try to follow these, then it's going to make the process for yourself and your lender and everybody else involved, the seller and your realtor, is going to make the process a little bit easier. And if you're doing a refinance, being prepared before you pull the trigger and doing that application, highly recommend doing a lot of this stuff too. So first thing I always tell everybody, very first thing, do a budget. Do a budget. What you want to do for the next year, plan that out 5 years, 10 years, 15, 20 years, at least have an idea of where you want to be rather than say, well, I think I'm going to buy a condo downtown Chattanooga. Okay, great. That sounds wonderful. What are you going to do if it's a 1-bedroom condo and you plan on getting married and have kids? So you want to have a plan. Nothing against condos. I love them. I think they're great. Downtown Chattanooga is great, great vibe and everything. It's fun. But you'll want to have a plan what you want to do in the future. So preparing a budget and knowing where you want to be in the next few years is super important. Talking about budgets, getting financial documents together and make sure you have those organized. That one comes up quite a bit in the origination community. Talked to a lot of my friends, or friendly competitors. Like I told them 6 times to get me W-2s, and they keep telling me their tax returns. So,
Yes. Yes.
so, and a lot of people don't do this, on a day-to-day basis. I mean, I know the difference between a W-2 and a tax return. That's
Right.
where Wendee and other originators here in the credit union are going to walk you through that and kind of help you with that paperwork and know what it is. I always tell everybody, it's that thing you send the IRS and the top it says 1040, or something. And if it says it's 18 pages, we're going to need all 18 pages.
Yeah.
So,
Yes.
so make sure you're getting your most recent 2 years tax returns together, personal tax returns, and business. If you have a business, all businesses, if you own multiple businesses, you want to make sure you have all those together. I know we're going into tax season soon. So, if you've come after February 1st, if you've gone ahead and you've filed your taxes, then we'll need the most recent that you've filed and have been accepted by the IRS. So 2022 or 2021 taxes, 2020 taxes, if you filed them. If not, you generally have until April the 15th. Is that right? And you'll have to produce your 2019 and your 2020 tax returns. Any W-2s and 1099s that go with those, we're going to need those as well. Those are supporting documents. Make sure they match. Also, any and all jobs that you've had. I know several people have switched jobs over, the term of 2021. A lot of younger people, especially, are going from one job to a better paying job in 2021. So you'll need to make sure that you're saving all those W-2s and getting those to us, because we will need those. Because anything that you put on a mortgage application, what do you have to do, Wendee, when you put something in a mortgage application? You have to do what?
Document it. You're going to document it.
Everything has to be documented.
Yep.
And if you're going to say on there that you worked for XYZ company for 2021, and then you give us your W-2s, and we have 3 different W-2s, and one of them is XYZ company, but then there's 2 other companies that you didn't put in your application. We're going to ask why, and we're going to need to correct that application. Okay.
Right.
So that's definitely important, because we have to have a timeline too of where you worked and when you worked. And people sometimes say, well, you're getting into my personal business. Well, a financial institution is doing a loan for you, and we have to make sure that you're credit worthy, your income can support the document, the loan, et cetera. So we do have to go and look back at generally a 2-year history. So that's important to get those documents together. If you're doing refinance or purchase, go ahead and get those together. Okay. Bank statements. Generally, we're going to need the most recent 2 months of bank statements, especially if you're doing a purchase, you'll be putting money down, or if you're going to be using money for closing costs. Those funds have to be in your name generally, unless you're getting a gift. I know that's something that it's always a discussion up front. I know, Wendee, you talk to people up front, about if they're wanting to purchase, where's your money coming from if you're going to put a down payment? Can you show that in a bank statement? It's very, very important.
And on those bank statements, if you've got large deposits, go ahead, get ready. We're going to document it.
Yeah.
So get ready.
You may want to write on another piece of paper,
Yeah.
$5,000 deposit was for so-and-so. That was a check. I can document the check. Or say, hey, that $3,000 was cash. If it was cash, just let you know that can't be used for down payment. It can't be used for any type of closing costs. So cash, unfortunately, in this business is not king. I do have to have a paper trail, any funds. I would also recommend any previous closing papers you might have. I would go ahead and gather those up, especially if you're going to be refinancing. You may want to use that title company that you used last time. Sometimes title companies may give a little bit of a discount. It's worth a try, to be honest with you. I know we work with several title companies here in the Chattanooga area, North Georgia area, and a lot of them are great to work with. And it's always, if you're thinking about refinancing and you used XYZ title company last time, give them a call and say, hey, I'm thinking about going with TVFCU refinancing. If I go through you guys, can I get a little bit of a discount? Doesn't hurt to ask. Okay. Plus also, I would recommend go with the title company that gives good service too. Most of them do. Good turnaround times, good closing agents. They discuss the closing documents with you at the closing table. I would definitely suggest using a company that you used before, or that you might someone might recommend to you too. It's important because they're one of the third parties that we're going to use to make sure there are no liens on your property, taxes are paid up front, and for the closing. We'll be using a title company generally of your choice. So very important. Another item, insurance, homeowners insurance on properties. When you may want to expand on this, but what if, let's say I own my own home, but I've got 4 other properties that I rent out when it comes to insurance?
Yes, we're gonna need a declaration page for each one of those properties to be able to show our underwriter whether those taxes and insurance, with your insurance paper, to show whether it's escrowed into that payment that's calculating into your debt to income ratio. So gotta have all of it.
That's then, sometimes the loans can be complicated, because people own multiple properties or multiple businesses, but we do have to document all that. It has to be documented.
And as well, if you've got like an HOA for each property, you've got to document that. So
because that's going to be asked. That is going to be asked. And people are always, I've asked that friends of mine that are not in the mortgage business, are like, why do lenders, and not just TVFCU, but any lender, why do they want so much documentation? Why do they want to know all this? Well, you're doing the largest transaction of your life. And it's not like a car loan. This is a big transaction, tens of hundreds of thousands of dollars, honestly. And as mortgage lenders, we are held to great scrutiny to be able to show that you have the ability to repay this loan back. We can't, it's not the good old days where you could say, hey, I'm going to state my income and lender's going to take my word for it and we're just going to keep on moving. We have to document that you have the ability to pay this loan back. Several federal regulations and guidelines that we have to adhere to ensure that you do that. Now, it's just not TVFCU. That's any mortgage lender you're going to deal with in the United States. That they do have to document that you have the ability to repay this loan back. And also support any other current debts that you have too. All that goes into the mix. We have a thing called DTI. So what does DTI stand for?
Debt to income ratios.
Debt to income ratio. So, and all that's going to take your gross income. That's reported gross income. That's whether it's W-2 or if you're self-employed, what's going to show on your tax returns. Very, very important, especially in the residential mortgage world, what you report as income. I know several friends, even my father was self-employed for many years. A lot of people write off things. And we can take that into account sometimes, and but a lot of those things you write off in your taxes can't be used as income. So you may show gross receipts of $180,000 a year, but after write-offs, you may only show 60,000 in gross income. So if you're self-employed, independent contractor, do take that into consideration when you're initially talking to someone about a mortgage loan or an application. Be honest about your income, about what you're showing, because we're going to have to verify it. It always shows up in the tax returns, regardless. So that's just one of those things. If you've had a life change, let's say divorce decree or divorce, we're going to need, in many cases, a divorce decree. If you have children and there's any type of child support, we're going to need a parenting plan along with the divorce decree to show who pays child support, how much is being paid, the ages of the children, how long that's going to have to be paid, and if you're receiving it, how long you're receiving it too. That's very important because some people that child support is used as income to qualify them for a loan. So, and also too, if they're paying child support, and on your application, it's going to ask if you're currently paying child support. If you mark no, it's still going to show up on your pay stubs most of the time anyway. So something to keep in mind. That does kind of lead me to one thing about an application. You want to be as honest as possible on your loan application, and you want to read over it too to make sure you've answered the questions correctly. And if when in doubt, just ask your originator, because what you put on the application is going to help us better determine what we can do for you. So very, very important about that application. Plus, I know, Wendee, you go through an application, and sometimes we call them red flags. You'll see a red flag, and just name a couple of red flags maybe you've seen on something that. Let's say you've talked to somebody, and then they go ahead and apply, and something didn't come up in the conversation, but you noticed on the application.
Like if someone has placed child support on their application, but we're not going to be able to show proof that they've received it for a certain amount of time, and that it's going to continue for at least another 3 years, we're going to have a problem getting in there and counting that. So, it's important to document with, like you said, your child support agreement or your divorce decree to be able to prove how long that's going to continue.
Yeah, very important, very important. I know, and on the application, it's going to ask, if you've ever filed bankruptcy or you in default of any federal loans or anything like that. Be honest and upfront, because once we pull your credit, it's going to show up there too, in many cases. And it's not that, we want you, it's basically help us help you. Because, sometimes someone might not be in a current situation where they would be able to refinance or to buy a home right now, but at least we can tell them, hey, right now you don't have enough for the down payment based on your credit as it is now. If you do this, this, and this, hopefully you can improve your credit, plus also save back a little bit more money, and maybe 6 to 12 months from now might be a better time for you to do that. I know with our products, we have a lot of things we can do because we have our in-house loans, our portfolio loans. We have a lot more leeway a lot of times, including wonderful. Our 100% purchase product, 100% purchase product, which is great.
With no MI.
No MI.
No MI. Yes.
Anything else you can think of as far as financial documents or paperwork they may want to set aside and have that ready? We ran through closing papers, divorce decrees, insurance. If you've had any type of settlement and you've paid something off, if you can find that documentation, because sometimes the credit report may not reflect that.
Right.
I know we've seen that quite a bit. And then also student loans. That's another one. May not accurately reflect the current payment sometimes.
Right. And most of the time it doesn't.
Yeah, it doesn't. It doesn't. The payment may show, this amount on the credit report, but they're actually, no, I've got a document here showing this is what I actually pay. So, documentation.
Yeah.
Anything else that will help us. Yeah.
Yes.
And more is better. I mean, we can go through the paperwork. That's okay. But if you get us more than what we need, I'd much rather have that than having to fight and get a piece here and a piece there.
Right. Yeah. And that drives them crazy as well
Yeah.
because
Yeah.
we're having to, constantly, I need this, I need this. So, yeah.
Yeah. Yeah. And that goes back to the application. If you're answering the questions accurately and giving us accurate information, then the back and forth having to come back to you, well, hey, I know your application said this and you signed all these documents, but I got your W-2s and you said you only had one job last year, but you actually had three, that's where it needs to be as accurate as possible if you can. So also knowing, like
Right.
if you've had multiple
Right.
jobs over the past 2 years, know when you worked for these companies. Hey, I worked for Shaw Industries from June 1st to October 1st. Then I worked for, BOU from so-and-so date,
Right.
that really helps. That helps a lot.
Yeah.
Next one is appraisals. I know on purchases or on refinances, this kind of comes up more sometimes but the condition of the collateral. We were talking about this before we went on air. Tell a little bit what you've seen on some homes where the borrower could have avoided something.
Well, and I they're in the trenches of doing home improvements, and they really don't think about the fact that there's an appraiser going to walk through the house and they get to the bathroom and it's gutted.
Yeah. Yeah.
Well, what's the problem? That's what I'm doing this for. Well, okay, it's a little problem.
Yeah.
So, yeah.
Lenders will want that to have that finished because
Right.
they don't
Right.
want to loan on a home that's got unfinished work on it.
Right.
Plus, also too, there could be issues as far as the contractor didn't get paid and could put a lien on the property in front of our lien. So
Right.
that's
Right.
another issue too.
Yes.
You want to make
Yes.
sure that the home, if it has any work that's been completed, if there's any damage that does need to be repaired. So it's very, very important, especially having an appraisal done. So, and also too, I tell people this, and it doesn't really affect the value, but I say pride and ownership too. If a person's
Right.
going to come in and take some pictures, make sure everything looks tidy, and it does help with the pictures. Again, it's probably not going to make or break a deal, but if the bed's made or not, no biggie. But definitely want to. The appraiser definitely needs access to all rooms and is able to go into all rooms of the home and take pictures. That's a big deal.
Correct. Yes.
Communication. We talked about this before we went on air. Wendee, what do you have to say about voicemail and email?
Well, just like you were saying, and people don't sit and look at their email all day like we are. So
Yeah.
I get that, but you have to make an effort to make sure that you're at least checking that a couple of times a day, just, as follow-ups from, me, our loan officer assistant, processing, that just helps the process of your file to keep moving and not be stagnant, waiting on, either a response. And same thing with voicemail. I've had people say, "Oh, don't leave me a voicemail. I don't check those." What? Yeah. So yeah, it's so important to keep that open communication through this whole process.
Yeah,
So,
it's two-way communication, and if you've got a realtor, it's going to be three-way communication.
right.
Your buyer's
Exactly.
seller's realtor. Everybody. And that's something that everybody needs to make sure that they're doing is being communication.
Right.
And I do tell borrowers or friends of mine, it's like, hey, if you're going through a mortgage process, you need to be checking your email every day because you may get something from your lender that needs attention. Also,
Right.
if you get a phone call from your lender and they leave a voicemail, check that voicemail. Make sure it could be something that's a priority.
Yeah.
Your closing disclosure came out and you need to sign it or something
Right.
like that, or
Yes.
or they
Yes.
need another document or something like that. Definitely keeping those lines of communication open and make sure your voicemail is clear. Make sure
Yeah.
it's not full.
Yeah. All right. Make sure it's set up.
Make sure it's set up. Yeah. Voicemail is set up, and make sure
Yeah.
you have emptied out your voicemail. Okay,
Yeah.
that's a big. That's something I've noticed in the past 2 or 3 years.
Yeah.
Either people not using voicemail or they just don't check it. Texting is great. I love it. I do it all the time. But voicemail is very important too, especially in the business world. Do need
Sure.
that.
Yep.
And also too, let your lender know the best way to contact you. Do you want to be called at work? Would you rather be called on your cell phone? We don't want to bug you at work. If you don't want to be bugged at work, I don't blame you.
Right.
But let us know if we can call you on your cell phone, and if you can't
Yeah.
answer, we'll leave a voicemail, and hopefully your voicemail's set up. So
Yeah.
very, very important. And then probably one of the last things to talk about is just liens on the property and property taxes. We have seen this come up again. 2021, 2020 has been an interesting year. I don't know if I've seen as many title issues come up on properties, and I don't know why.
I know.
I don't know if it's just something we've just noticed, but old liens showing up or back taxes and things like that.
Right. Right.
And it may be from the older generations passing away and the younger generation inheriting it, and the titles to these properties were never cleared, or just things never got cleaned up on them. That might be it.
Right. Right. Yeah.
A little bit suspicious on that, but that could be one thing. And we don't see it all the time, but every now and then I'll get an email, hey, title search came back and there's this old, judgment or old lien that either it was paid off, it was just never cleared up,
Right.
or the borrower
Right.
just forgot about it, or something like that.
Yeah. So like you said, if you have any, preference of that knowledge is going to come up,
Let us know ahead of time.
give us a heads up,
Yeah.
because it is so hard right now trying to get sometimes even into the courthouses to try to search it. And, I know that was a problem back last year, it shut down. They, oh, yeah. So, yeah.
And everybody, if you're listening, what that is, you actually have to have an abstractor that goes and searches the records, the deeds, in the deed book to that property to see liens that are on there currently, liens that have been released previously, any back taxes, judgments, anything that's attached to that deed, that property. So that's something, again, we're going to have to document, because the reason being is because a lender, TVFCU, or any other lender you can go through, they're wanting to make sure. We're going to make sure our lien is perfected and we are in the correct lien position, whether it's a first mortgage or a second mortgage. So very, very important for us, because we want to make sure that our money's okay, on this property, or our property's okay. So very, very important.
Yep.
I think that kind of got through everything. Oh, one last thing: get pre-qualified. I know you mentioned that before, but that pre-qualification letter, man, that's important.
Yes.
Super
It is so important.
Yeah. And be honest with your lender about your pre-qualification application, where you have your money, if you're going to be putting for down payment or closing costs, be honest about your income. Very, very important. I know I had a situation come up, it's been a few months ago, was told that the money was in their bank at another bank, local bank. And when it got down to it and they got their purchase contract, the lady was like, oh, good. Okay. Yeah. I'll go ahead and put that money in the bank. And the originator's like, I thought you said it was already. Well, it's going to be here in the next hour.
Yeah.
I've got to go get it out of the freezer.
Yeah.
So it was it was $15,000 cash in her freezer.
Yeah.
So
yeah. And another thing that I've ran up on that is new to me, I have this account with this cryptocurrency, blah, blah, blah. I'm like, okay, I need a statement on. Well, I don't really get a statement from them. Well, yeah, we're going to have some kind of record to show how long it's been there, how it's built. And so that's a little bit different for me because it's not per se a bank. So
and it's a new thing. And I know the big lenders and Freddie Mac, they have guidelines for those, how to verify that, but it's very specific. And any borrower, and they know, cryptocurrency, they know what is needed. They know what can be gotten. So if you're talking to a lender and you're going to be using those type of funds, just know that that it's doable. It's just you've got to make sure that you're getting the documentation we're going to need. Okay, it can't just be take somebody's word for it. Oh yeah, I've got $80,000 in so and so cryptocurrency. We're going to have to document it. Like everything else.
Right.
So,
right. Yep.
All right, we're going to go ahead and wrap this up. Sorry we lost Jessica, but hanging out with me, you did great. Any last tips you want to give, Wendee, or any thoughts?
I mean, rates are still great right now. Go ahead, call myself, call Jessica, call one of our other originators. I mean, get in here. Let's get it done before these rates do start going up. So, yeah.
That's great advice. It's really good
Yeah.
because everything I'm reading, and even though they said this time last year that rates were going to be going up, they finally really are going to be going up. I mean, we're seeing issues with inflation, stuff like that. Rates going to go up. I don't foresee them going up, substantially, but they're going to inch up. They're still going to be low. Some of the forecasts I saw were maybe up close to 5%, maybe by the end of the year. It might be that, it may be higher. But still, it's still going to be very, very fairly good rates, lower rates than what we've seen in previous years. So we're going to put some contact information up here so you can get a hold of TVFCU and get a hold of Wendee. If you want to get a hold of us at a real estate department, you can call 423-634-3667 or email us. If you want to get a hold of Wendee, contact Wendee at 423-634-3674 and wendee.carter@tvfcu.com. Also, I will say, if Wendee doesn't answer, leave her a voicemail or shoot her an email. She is very busy like everybody else, but I know Wendee, she's going to call you back. So,
all right.
Well, thank you, Wendee, for joining us. Really appreciate it.
Thank you, Bryan.
Had a good time. Anybody else, just give us a shout if you need anything, and everybody have a great day. We'll talk to you later. See ya.
Thanks. Bye.
Bye-bye.